how to raise millions for your business acquisition. In this video, I'll be talking about how to raise hundreds of thousands to millions of pounds or dollars for your business acquisition. So the first thing is that you need to build relationships. And these are long-term relationships that you need to build. Google is your best friend, LinkedIn is your best friend. If there are two platforms that you want to focus on over all other platforms when it comes down to raising finance, it's Google and LinkedIn. And sometimes you might say Google is more important, sometimes you might say LinkedIn is more important. I'm going to put a spin on that to say that if you're looking for investment, meaning investors, equity investors, then without a doubt, LinkedIn is better than Google. Although Google, I've raised equity investment through Google too, but LinkedIn just seems to be, you're building those relationships on LinkedIn. As long as you do it properly, you can't go out and message someone on LinkedIn straight away and say, look, I need £1 million. That's never going to work. The number one thing you need to realize, look, you won't be able to raise finance on the first conversation that you're going to have with an investor or even a lender for that fact. You're going to have multiple meetings, phone calls, Zoom calls, presentations, emails back and forth to be able to get to the goal of raising whatever number that is. And by the way, it doesn't matter whether you're raising 50,000 or whether you're raising 5 million, it does not matter. You won't raise it on one phone call. The only time you can raise it on one phone call is if you've had previous relationship where you've raised funds from that person before and they have given you their money and then they've got a return on their money too. That's the only time that someone might trust you enough to be able to give you the 50,000, the 5 million in one phone call. Because why should they trust you? They don't know who you are. They don't know what your deal is. They have never done business with you before. No one is going to trust you if they haven't done business with you before. And even then, if it's a smart investor, they've been burnt before. And therefore, they're going to be extremely careful where they're going to put their hard-earned cash. Whether that's your deal or whether that's someone else's deal, they're going to make sure that they do their due diligence. But these two platforms, LinkedIn and Google, are your best platforms. Now, Google is a little bit better for lenders because lenders are in the business of lending money. Well, who would have guessed it, right? But lenders are in the business of lending money, so therefore they are marketing their loans to you. For example, you always see ads for American Express and these types of companies who are trying to get their credit card in your wallets. And by the way, you can't use a credit card to buy a business, right? That's just stupid. I know there are some people who think that you can do that, but you can't do that. But lenders are marketing their services to you. Now, depending on the country that you're in, they can't market very aggressively, but they can sort of put their name in front of your face that, for example, they are there to finance your business growth. You need to reach out to these people, the lenders, via Google. Just type in literally business acquisition loan, equity loan, or what we're talking about, asset-backed loan, not equity loan. We're talking about asset-backed loan, cash flow loan, all of these things. You can just Google it and you can search the pages. Now, don't be a immature searcher and only look at the first page. This is where you need to go deep. So you need to play with the pages of Google. Google has hundreds of pages that you can go through when you're making a search. So search the first page, the second page, the third page, the 20th page if you have to. I've never gone to the 20th page of Google for anything for that matter, but go to multiple pages and play with the search terms that you're using. So for example, if you are making an acquisition in, for example, healthcare, then you can type in business acquisition, healthcare business acquisition, finance, for argument's sake. Or then you can type in, let's say, for example, within healthcare, you're doing care homes. You can do acquisition finance for care homes. So although you're searching for the same thing, you're using the different keywords to come up with different results. I mean, probably don't have to tell you that because we're living in a day and age where we're using search bar, multiple times a day. But it's, beyond me that some people don't use those functionalities that are available to you. So you're going to use the search terms, and you can find equity finance, by the way. You can find investors on Google too. There are these huge networks out there where they're looking to pull together capital. And you can go and search for example, search funders as well. So search investors. So there's something called search funds nowadays. Well, I wouldn't say nowadays, it's been around for some time now. But they are willing to invest a significant amount of capital in an entrepreneur who they know that they can, trust that entrepreneur with their skills. So you need to have some sort of track record normally. When I say track record, search funds or search funders are basically looking at people who have just graduated from business school, or they're an entrepreneur, they've got some background in entrepreneurial experience, and they're funding these people. So if that's you, if you've got some background in entrepreneurship, if you've got some background in, for example, formal business training, then using the Google to search for search funders is really key. And also they're available on LinkedIn everywhere. Search funds is a really controversial topic for me anyway, because I don't see why anyone should fund someone for searching for a business. That person who's searching for a business should fund that stage themselves, and then when they've got a deal on the line, that's when they should go to funders and get the investment or get loaned accordingly. But that's what I've been doing all day today. I've been searching on Google. I've been searching my old contacts through my email. Now, once you've been doing this for a little while, like I have, then you're going to have this huge black book of people that you've spoken to over the years, right? And you need to tap into that. So, for example, in my phone, in fact, let me see if I can get my phone. One second. Where is it? Where's my phone? So, in my phone, what I do is that I can just go to... you know what? Someone just messaged me as well. I made a phone call. So I made a contact with someone. It was like 2 years ago or something like that. And at that stage, they said, look, we are not in the right place to give you funding. Well, you're not in the right place, for example, as a business for us to give you funding. So what they said is that, when you get to a certain stage, then feel free to give us a call. What I did is I kept in contact with the person. Now, what happened, I don't know what happened to my email, but I just completely lost all history on my email for that person. So then I Googled the institution, because I remember the name of the institution, of course, the Investor Club. And I contacted one person who does not deal with anything to do with funding. I contacted him and I said, look, we've had conversations before, but I've seemed to have lost your contact details. Can you get someone to call me? And just now, live on call, someone has messaged me. Right now, I'm not going to go into the details of who's messaged me, but you can see that little black, the little blue dot, right? Little blue dot. First message, someone just messaged me. Anyway, what was I saying? So, this black book of contacts that you build up over time, you go to your contacts, and if I just type in finance in my, if it'll be helpful now to spell it properly, finance, finance, then you can see I've got these contacts that come up, because these are all of the people that I've been speaking to over time with regards to finance. And I contact all of them, right? When I need this 1 million, I'm going to contact every single one of these people and we'll say, look, where are we? How much can you give? And sometimes, this is really important to understand too. You can syndicate finance together. This is how I've done. I want to say every single deal. I think majority of the deals that I've done with some sort of syndication. So I've got investors that have pooled money together, and then we've got an acquisition done. So for example, for you can get some investors, you can get some lenders, and investors can be, outside investors, it can be friends and family, it can be some of your own cash, it can be business capital that you're using. Every business has, or any good business has some retained earnings. You pool that together, and then whatever the difference is, you first of all, you need to try to get that from seller finance, right? So funding, seller finance should always be part of the mix of your business acquisition, right? And they are financing that part of the deal for you. So you get together these investors, the rest of it you should try to fill in with seller finance. Now, let's say for argument's sake, they're only willing to finance 30% of the deal, the seller, right? So then now, and let's say you've got 30% from yourself, for argument's sake, now you need to go and raise 40% from lenders, for argument's sake, right? So now you go out and say, right, that 40%, let's just spitball some numbers, 400,000 for argument's sake, 400,000 we need as a debt facility. And you're going to go and Google that, and you can see, right, who can give you that debt facility. So use a black book, use your contacts over time, and use Google and use LinkedIn. You'll be able to find an unlimited source of funds. Now I'm going to take a quote from Dan Payne. I can't do 2 minutes. I can't remember word for word what he says. He says something like, there's so much finance out there for a deal. It's just you need to find the right idiot who's going to give you the money. That's not the right saying, but I'm not saying that finances are idiots. Of course, finances, investors, they have grown their wealth over time to be able to become investors. They're not idiots. But what the saying is that, you're a fool, and why should someone give you money because you're going to do an acquisition? But you will find someone, right? You just have to make the reps, you have to make the phone calls. I always say this in every single finance related video that I'm going to say. On my first deal, I made 300 phone calls, 300 phone calls in a week. It might be in 2 weeks. Let's just make it sound good, and it's in a week, right? I made 300 phone calls in a week, and every single one of them said no. 299 of them said no, and it was the 300th call in which someone said yes to me. And then when I made the financial presentation to that person who said yes to me, they also said no to me, so then I had to start the clock again. Yes. I hate it when people, students, people that I know, people, I was speaking to my cousin the other day. He was telling me about his situation, and he's in an okay situation, but he wants to make his life better. And I said, look, you've got all of these properties that are being developed on the left-hand side, right? Why don't you just go and speak to the manager who's developing the properties? They got a sell. They normally have this sales office, right? Why don't you go there and find out how much these properties are off plan, right? How much are, because normally you get a discount off plan, right? And then go and find some investors who are going to give you the money to go and buy some of these flats. And he said, oh, where am I going to find investors from? Well, you need to be resourceful, right? And you need to speak to more than 2 people. The amount of times people say to me, I said, what have you done for your business acquisition? Yeah, I look for I made 2 inquiries. Well, obviously you're not going to make a business acquisition. You can't make 2 inquiries, right? If you get lucky, that's something different. You can't make 2 inquiries and think that you're going to find your perfect business. Just like you can't make 2 inquiries with investors and think that someone's going to give you money. And all you've done is send them an email. You haven't even picked up the phone. Today, in today's day and age with, internet and email and digital communication, you need to set yourself apart. Set yourself apart on LinkedIn, for example. Do the message, do the DM, no problem. Make the connection, do the DM. That's fantastic. Build up a conversation, but as soon as you feel it's right, and don't be creepy about it, right? But as soon as you feel it's right, okay, we've had a little bit of back and forth on messages, and should we set up a phone call? Make a phone call, speak to the person, today you can do it via Zoom, right? You can meet the person via Zoom. Obviously the best is in person. The connection that you make with someone when you meet them in person is something else. Now, to be perfectly honest, I've only met 6 of my investors ever in person, right? And I have multiple investors that we work with over time, but I've only ever met with 6 people, 6 investors in my life. Otherwise, it's all been via Zoom. So today you can do it via Zoom. We've got to partially thank the pandemic for that, of course. But make these connections, set yourself apart, pick up the phone, get a Zoom call as soon as you feel it's the right time to do that. And then you can take the relationship even further. Now, how many times do you need to speak to investors and how many times do you need to speak to lenders before you can actually make the real pitch? Really, you need to have like minimum 2, I think, warm-up phone calls. Unless it's a lenders, you can go straight for the kill, right? You want to make 1 phone call. They want to know what you're about. You want to tell them what you're about, right? And you make 1 warm-up phone call, and then second meeting you go for the kill because they're in the business for lending money. With investors, it's a slightly slower process. So what you're probably going to do is have minimum 2 warm-up calls. So first one, introduction. Who are you? Who are they? What you do? What they do? What they like? Have a bit of personal rapport there. What are their interests? What's your interest? How do you align? So important. How do you align as people? How do you align as businesses if they have a business, right? How do you align? What's the alignment there? Second, another little bit more in depth, getting to know each other. And just tell them, this is the key phrase that I always use. Oh, if there's anything of interest that we have in the future, do you mind if I contact you? Do you mind if I contact you if we have anything of interest which falls into this sort of criteria? So you kind of lay out what your criteria is. Now, this is super important. It's a good thing we got to this point actually, that each lender and each investor has their own criteria too. Yeah, their criteria is actually more important than your criteria, because if your criteria doesn't match up with their criteria, then they're never going to give you money, right? So find out what their criteria is. They have normally a ideal investing, size that they have. So for example, if you go to friends and family, unless you've got high net worth individuals in your friends and family, you're probably not going to get more than 50 grand, 100 grand out of them, right? Depending on what their own net worths are. But when you go to investors, is, sometimes they only want to make investment in 500,000, millions, 5 millions. It depends on their own net worth. Look, if you're a big investor, let's say for example, you've got a net worth of 100 million and you've got 50 million to deploy into investments. Making a 50 grand loan is not going to move the needle for them. So they're going to want to have at least 1 million, 2 million to be deployed in a investment. So understanding what their criteria is, their ideal deal size, and then matching that with yours. And this is a clue. If you can get their criteria and then find a business and a deal structure which meets their criteria, there you go. You can potentially have a funder, right? You got a funder right there. So that's one of the secrets actually that we use on our mentorship and when I'm working with people, and I use that myself too. Now, another thing is to understand is that even though your deal might meet their criteria, sometimes it's not the right time. So, for example, I was speaking to an investor 2 weeks ago. I've been speaking about this on video on YouTube that they do 7.5 up to 7.5 million in investments, right? And I had a chat with them and they said, yeah, we do that, and that's something we might be interested in. However, for this quarter, we've closed out our funding round. For this quarter, we've closed out our funding round, which means that they've got the money, they like the business, they like the vision, everything, but for the next 3 months, there's no money available, right? They've closed out, meaning they've used up all of their allocated investment funds for that quarter. And only when the next quarter opens up from April onwards, will they have, meaning the next quarter, will they have funds which are available. So even though their criteria matches up with your criteria and your criteria matches up with their criteria and everyone likes each other, you're in alignment and they like the business, they like the deal, everything, they might not just have the money available at that point. Right? I've spoken to so many people, they said, oh, you know what, can we get involved in 6 months because we've got something tied up here, capital tied up in something at the moment, and funds are going to be released from there so that we can allocate to your deal. So just go to know that sometimes everything can be perfect, but they don't have the funds available at that point when you need it. Now let's say for example you've got completion in 2 weeks time, just to make it even more tight. You got completion in 2 weeks time and you're £100,000 short, for example, £150,000 short, wherever. They haven't got the money. You have to go and find it, right? So you have to be in alignment altogether. So if there's 2 places I want you to focus, to put all of your attention and to put in relationship building, it's LinkedIn, number 1, and Google for lenders. So for investors is LinkedIn, yes, and for Google for lenders. And by the way, vice versa, it works too. There's investors on Google and there are lenders on LinkedIn too. So it's just about being resourceful, building relationships. And like I said, you saw that black book of contacts. I just typed in fun, and that's the good thing you do. Every time you speak to someone and they are in the business of giving money through investment or lending, you just put them in your phone book, right? Put them in your phone book. I just finance. I don't really do anything else unless there's something that really stood out. And then you can contact them over time, have them in your email. And like I said, I lost some of my emails. The good thing is that I like to copy in at least once, I like to copy my CFO or someone else who's on our board with these investors, especially if they've got, that's one of the advantages that you have when you have a team of people who are working with you. They also know people. So I was reaching out to a broker. He's a finance broker, and he knows investors and lenders, and he's actually knows my CFO for a very, very long time. And in fact, I'm currently getting some mentorship for senior management, CEO management, and he knows one of my board members for a very long time. Right? So this is an advantage of having a great team around you. Not only do they motivate you to continue to do the best job that you can, they advise you to ensure that everything remains successful, and their contacts also become your contacts. So that's enough for this video. If you want to find out more about acquisitions, increasing enterprise value and exits, carry on watching videos on this channel, and I will see you on the next one. Of course, if you want to find out more about acquisitions, there's a link in the description and you can watch the value acquisition video training there.